A big move higher for 10-year note yields, which rallied about 12 basis points today, getting as high as 317. That's just shy of the May high we saw of 320, but again, it was a big move today. We saw that type of move. We have seen yields steadily moving higher, getting back above 3%. And then once we did, obviously things sort of traded sideways, and now we've saw this big move on Friday. Yes, it was high on higher inflation. We saw CPI come in higher than expected. We did see Michigan sentiment come in lower, so a little bit of a tug of war there, but as you can see, yields continue to move higher. That is really what the draw was, the higher inflation numbers. And what will the Fed do? Fed meets next week, and they are going to have to face some of these challenges, at least verbally. They are going to be expected to raise rates, so a lot going on there. We'll talk about more about that in a moment. But again, yields moving higher in a big way today, 12 basis points higher in the 10-year note yield, all the way up to 317 on today's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll notice volatility has been trending higher with yields, and that continued today. We saw volatility marking higher as yields went higher pretty much for much of this week. Ultimately, yields continuing to move higher should push volatility higher, and reversals lower have historically pushed volatility lower. We'll have to wait and see if that happens, but a lot going on next week. Starts off with PPI and retail sales. Now from CPI today, we already know that there's inflation. Retail sales are supposed to come in a little bit weaker, so a weaker economy and higher inflation, not really what the Fed is looking to do, but ultimately the Fed meets on Wednesday to raise rates 50 basis points. That is fully priced into the market. Next month they're meeting again, 50 basis points fully priced into the market for July. Now starting to see some leaning towards a possibility of 75 basis points, and the market is right there with it at around 50 odds. So it'll be interesting to see how the Fed addresses the current economic situation, the high inflation, the declining growth, or the lower growth expectations for second quarter, as well as their quantitative tightening, which means you're going to probably see some of those higher back-end month yields going higher as the Fed doesn't reinvest doesn't purchase more assets, obviously unwinding all that they had bought and purchased after COVID in early 2020. So 10-year note yields seeing a big move higher on Friday, highest we've seen since the middle part of May, as 10-year note yields get up as high as 317 ahead of next week's June FOMC.